welcome to this thematic session about the gateway to the Chinese outbound investments. I'm very pleased we have a very enthusiastic turnout this morning. I think we counted over 1,200 people turning up in the morning session. I hope some of you had the opportunity of attending the opening part of today's event. And now in the afternoon, we have these thematic breakouts, one of which is about a very hot subject, Chinese outbound investments. And the very good turnout this afternoon in this session also underscores the keen interest which you and American business have towards this exciting new trend. In the last decade, Chinese investments was concentrated in developing countries in Asia, Africa, and Latin America. In contrast to the significant bilateral trade between China and the United States, both countries are actually each other's second largest trading partner. China's stock of direct investment in the United States only represents 0.3% of the total stock of FDIs to the US from around the world. According to official statistics released by the Chinese Ministry of Commerce, Chinese investments in the US amounted only to 4.9 billion in stock and 1.3 billion US dollars in flow as of late 2010. But now, Chinese outbound investments is entering a stage of rapid development. A 44% year-on-year increase was recorded just in the United States alone. The Asia Society predicts that Chinese outbound investments will surpass $1 trillion US by the year 2020, of which a good share will flow to developed countries such as the United States. China has targeted herself a 17% average annual growth in outbound investments during China's 12th five-year plan, reaching $150 billion US by the year 2015. Many Chinese enterprises are actively seeking investment opportunities worldwide in a wide array of industries, from natural resources and energy to intangible assets such as technologies, brands, and distribution channels. Thanks to our partner, the Guangdong Economic Information Commission, we have 16 potential Chinese investors joining us today, and we also have 8 Hong Kong services companies joining the group as well. The Chinese central government offers strong support to the manufacturing industries to upgrade and transform the low-end and low-value added processing and move up the value chain. Guangdong, which is adjacent to Hong Kong, being the manufacturing powerhouse of China, stands well to benefit from it. As the base of China's light manufacturing industries for decades, we see that Guangdong enterprises have even more pressing needs nowadays for clean and automated manufacturing technologies in order to stay competitive in a more challenging global market and to comply with tightened environmental regulations worldwide. Most of these technologies, however, may not be readily available on the Chinese mainland. Chinese enterprises, therefore, have to look into more technologically advanced countries, such as the US, for research and development, business partnership, licensing, and investment opportunities. Whilst many Chinese enterprises have been investing abroad by themselves, surveys conducted by the Economics Intelligence Unit pointed out that in the course of cross-border business deals, Chinese enterprises face a number of challenges. from determining the value of the underlying project, managing cultural differences, to defining clear cooperation framework and strategy. That's where Hong Kong comes in. Hong Kong intermediaries have profound experience in providing full-fledged professional services, including financing, due diligence, feasibility studies, risk assessments, intellectual property protection, and valuation services. We know the language and the culture. We have the context. We help mitigate risk from both the buy side and the sell side and smoothen the whole process. Ladies and gentlemen, with more than 60% of Chinese outbound investments goes to or via Hong Kong, Hong Kong plays a pivotal role in bridging overseas technologies and Chinese investors together. After this seminar, 16 delegates from the Guangdong province will be meeting with U.S. companies in more than 100 pre-arranged business matching meetings. 8 Hong Kong services providers will be there to facilitate the cross-border business discussions throughout the meeting. So may I take this opportunity to wish everybody, to wish all of you, very fruitful business discussions. And now please join me in welcoming our close partner, Mr. Zhenli of the Economic and Information Commission of Guangdong Province, to say a few words. Thank you very much.
各位女士们,
Ladies, gentlemen, and friends, I'm delighted all of you have come to attend this China Investment Seminar held in collaboration with the Hong Kong Trade Development Council.
举办的中国投资洽谈会的会场。首先呢，
First, on behalf of the Economic and Information Commission of Guangdong Province, let me express our gratitude to the HKTDC for successfully bringing so many and such a wide range of entrepreneurs and representatives together.
企业家各方面的代表表示衷心的感谢。那么今天
This morning, our Council conducted a detailed and comprehensive discussion on selecting Hong Kong as the gateway to reaching Asia.
做了充分的、全面的论述。
I very much agree with the views of enterprises and experts expressed at the discussion. At the same time, I ask everyone to pay attention to one problem. That is related to the question about where Hong Kong is situated. It is just across the river from Shenzhen, which is part of Guangdong. I'm not sure how familiar you are with Guangdong, but it is an important province in southern China. It sits next to Hong Kong and Macau, with an area of 178,000 square kilometers, with a population of 104 million. Perhaps this is why most of those who head to the United States from China are from Guangdong Province. Many years ago, Guangdong people were those who settled in U.S. cities like San Francisco and New York, and behind the bustling Chinatowns in those cities. So connections between Guangdong and New York, and with the United States overall, date back more than 100 years. And these links have never been broken. Since China's economic reform and opening up, everyone is aware of the social developments in Guangdong. Last year, Guangdong's GDP reached 5.7 trillion renminbi. That's approximately 800 billion US dollars. This signifies an increase of 8.2%, a ninth of the Chinese mainland's total. Guangdong imports and exports overseas totaled 980 billion US dollars. Last year, its growth at 7.7% constituted a quarter of the nation's total. Guangdong's domestic consumption was 2.2 trillion renminbi, a 12% rise. Please note that this growth was higher than GDP and export growth. This increase was also a ninth of the national figure.
那么这个增长的话呢，也占了全国的1/9。广东有2个。
There are two hundreds to highlight about Guangdong. First, there are more than 100 countries investing in Guangdong. At the same time, some 12,000 foreign firms have been established in the province. Also, Guangdong is connected to more than 100 countries through investment and trade. To put it in one sentence, Guangdong Province is one of the most active and developed regions in China. Guangzhou, Shenzhen, the Pearl River Delta, and Guangdong's east, north, and west form the whole of Guangdong Province. Guangdong culture comprises elements from the Cantonese living in the Pearl River Delta region, as well as the Chaoshan people and the Hakka ethnic group. Let me summarize things with 3 points. Guangdong is relatively tolerant. Whether you're there for business or travel, to teach or to live, you will be welcome. Guangdong is also a practical place. People there are not going to overdress things. They simply get their jobs done. And Guangdong is also the most open. Economic reform and the opening up measures first took place in Guangdong, and of 3 places most opening up to economic reform, Shenzhen and Zhuhai are in Guangdong Province. The connectivity Guangdong has with overseas locations illustrates its openness. So all in all, Guangdong is about tolerance, practicality, and openness.
包容，一个是务实，一个是开放。那么我想呢，今天呢，我带了16
Today
个
in New
企业。
York, I have with me participants from 16 enterprises, and we feel Guangdong and Hong Kong can join hands together to connect with U.S. companies.
走出来，跟我们美国的企业家和各界接触，这里边呢包含着
This
巨大的
represents a
商
lot
机。
of business
我们的
opportunity.
企业呢，有
Some of
包
our
括
firms have
资
assets
产
of well over 10
10
billion renminbi.
省属的国有
Some of the
企业
firms are owned by the province,
更多的
and
是
more
大量
are
的
from the
民
private
营企业
sector.
那么这些企业里边有很
There are
多的
many
是
high-tech
属于
private
高科技的
enterprises
民营企
with
业
more than
自
100
己本
patents.
身涉及到申请的专利就多达100多项。他们这次
They
过来
strongly intend to cooperate in the fields of electronics, electrical goods, precision machinery, investment, and biotechnologies.
也在一些生物技术等等都有很强的合作意愿。我们来之前也
Before we
认真
came,
的
we did our homework.
跟我们美国
We
的
studied the materials of our U.S. counterparts and carried out exchanges with
这
them.
个互相的研究、互相的交流。那么等一会儿呢，
In a
我们还有
minute,
一个配
we
对
will
会
also have a
在这个
business
配对会
matching
呢
session.
我们每一家企业
There are 5
可能
U.S.
要
firms
对
signed up,
这个
and I
美国
believe
方
there will
面
be
的
good
企业有
interaction.
5家以上。所以呢，我想呢，
I
这
also
个交
hope
流是非常
representatives
充
from the
分的。
Hong Kong
我也
delegation
希望
can
我
work
们的
with us
这个香港
and
的
introduce
代
the
表团的同
services
胞
they can
跟我
provide.
们一起把香港的服务业注入到我们整个的配对活动中来。这样的话呢，我坚信通过我们之间的这样的交流，
Though
必
such
然
exchanges
会
will
促成
stimulate
我们
cooperation,
的进一步
we
的合
feel
作
we are quite rushed
起
for
到
time on
一
this
个非
trip.
常好的作用。
Many
同时呢，
firms
我也
which
感
couldn't
觉
make
到
it this time
我
are
们这
still
次来
looking forward to
时
coming
间
here.
也比较仓促，
And there are some companies which aren't even aware opportunities like this exist. I believe here in the U.S. many firms would like to get in touch with us through Hong Kong and work together to open up and to manufacture.
愿意通过香港跟我们进行交流和接触，同时呢，大家合作一起来共同的来开发、来生产。那么这样的话呢，我希望呢将来有一个机会
there'll be an opportunity in future for our companies to carry out through exchanges. On behalf of the Economic and Information Commission of Guangdong Province, I'd like to make this statement. Regardless of whether a company was present at today's session, as long as our firms have the desire, whether looking for consultation, an investment opportunity, a chance for joint research or production, and sales, let us know your thoughts. Speak to our staff here, or reach us through the Hong Kong Trade Development Council. We will do our very best to communicate your interest to our firms on the Chinese mainland.
我们一定把大家的这些意愿尽我们最大的努力去和我们内地的企业进行充分的交换。
That's how we can link everyone closer together and reach our goal of mutual cooperation and development.
共同发展的目的。谢谢大家。
We have three distinguished and highly knowledgeable and experienced panelists today. I would like to introduce them briefly. They are James Sun, Lili Zhang, and Dieter Yi. James Sun, who will speak first, is the Managing Director and Responsible Officer of Charles Schwab, Hong Kong, overseeing Schwab's business in Asia. He is also the chairman in Hong Kong of the American Chamber of Commerce. As chairman of this chamber, James led a delegation of senior AmCham leaders for the annual Washington, D.C. door knock in June of 2012 and had substantial discussions on a full range of issues, which I think some of which we'll hear about today, with key government officials from various departments, congressional staffers, and major think tanks. He also reinstated the annual China Conference, hosting top business leaders in the high-level discussion regarding the status of China's economic reform and the significant role of Hong Kong in China's 12th five-year plan. Dieter Yi is a partner with Milbank, Tweed, Hadley, and McCoy. Dieter heads the Hong Kong law practice of Milbank Tweed and focuses on advising on capital markets, corporate finance, private equity investments, and public and private M&A in Hong Kong, mainland China, and across the entire Asia region. Dieter has been responsible for numerous initial public offerings on the Hong Kong Stock Exchange, and he has also extensive experience in corporate restructuring and public company takeovers. I'd like to note also that he is presently the immediate past president of the Law Society of Hong Kong, meaning that last year, of course, he was the president. Finally, I'd like to introduce Ms. Lili Zhang. She's a managing director of Deloitte, and when she's not snorkeling or scuba diving in California, she's in Hong Kong advising multinational corporations on their inbound and outbound investments into and from the United States, with a special focus on multinational corporations doing business in the Greater China region. In addition, she's China Business Committee co-chair of the American Chamber of Commerce in Hong Kong. She's been a senior international tax partner with Deloitte for the past 23 years. And I'd like to point out, in July of last year, Ms. Zhang was named one of the leading women in business law by Euromoney Legal Media Group, and in March 2010, Lili received the Women of Influence Award from the Silicon Valley Business Journal. Now, I'd like to talk a little bit about what we expect to hear today. And from these three outstanding speakers, we're going to talk more about how Hong Kong has really been or represented 60% of the inflow and outflow through Hong Kong of the business from China to the United States. And it's emerged even today as stronger as the hub for facilitating the two-way investment flows. I've spent my career living and working in Hong Kong and China. My children graduated from HKIS, and we have come a long way from when the only way to do business in China was at the Guangzhou Jiaoyihui, when one took the train from Hong Kong through Shenzhen to get to Guangzhou. Today, the trend for outward bound investment continues to increase. This first quarter of the year, foreign direct investments are trending up again with a report by the Asia Society that there are $10 billion in the pipeline. In addition to the dramatic increase in the amount and number of transactions, there is another very important trend to bear in mind. Whereas previously state-owned enterprises dominated the Chinese capital flows to the U.S., it is reported that in the past 15 months, private Chinese firms spent more on U.S. deals than in the 11 years before combined, and account for 80% of the transactions, and most importantly, 50% of the total transaction value. Today, we have a unique opportunity to learn from key deal doers what has been successful and what has not, how to navigate CFIUS, the Committee on the Foreign Investment in the U.S., and other regulatory processes, how to structure the deal, and to obtain the best tax, legal, and accounting platform to make sure that your deal can be successful. Without further ado, I'd like to invite James Sun to begin with his presentation first. Thank you.
Thank you very much. It's nice to be back to New York City. I've always considered myself a New Yorker. I lived in Manhattan from 1994 to 2004. I spent this wonderful weekend at Lower Manhattan. I borrowed a place from my friend at West Houston and West Broadway. I mean, the city hasn't changed much, and I'm so happy that the small Japanese restaurant Tamoy is still there. Is Yama still there? I think it's probably still there. And for God's sake, the Webster Hall is still there. The taxi driver told me, so it's wonderful to be back. I don't want to spend too much time because I want to leave more time for the Q&A session, which is always the best part of the conference. Just very quickly, I listened through the presentations this morning and identified 3 keywords on China for now and for the next 5 years. And those words are urbanization, service, and consumption. It's interesting that the new trend on urbanization and how big an impact it's going to have on China. We're actually talking about the depth and the quality of China's urbanization. The peasant workers, maybe I should move this, okay. The peasant workers have gradually moved into the Chinese cities, first tier, second tier, third tier cities. And they are consuming. Their kids need to go to the city schools. They need to be covered on social welfare. When they're sick, they need to go to the hospitals. It's when those people, the new citizens in the city, are being served, and will generate the new consumption-driven demand, and that's a new driving engine for China's economy. It has slowed down, for sure, but it will continue to grow, and it will, through reform, the new capabilities and new demands will come out. Of course, the AmCham member firms, most of them are American firms, and some of them are European Latin American firms realize that trend. So they increasingly build their business in China for the China market before they are making products in China and shipping them out, and that has changed. I want to talk a little bit about China's 12th five-year plan. I consider the 12-year plan, the 5-year plan, as a roadmap, if you will. Because like it or not, the Chinese economy is a policy-driven economy, and you have to study the policies, and you have to study the 5-year plan. And if you really read through the new 5-year plan, it has a strong focus on service sector GDP growth. And it's less focused on export and investment. Okay. And that presents, honestly, an opportunity for the cities to grow in China. Again, going back to the concept of consumption. You're talking about city planning, management, global branding, worldwide distribution channels, technology, and innovations. And Hong Kong becomes very relevant because Hong Kong is a role model as a service economy for China, and Hong Kong can actually help quite a bit. In fact, 96% of Hong Kong's GDP is from services. And that makes Hong Kong very relevant to the next stage of China's development. China needs to upgrade its service industry structure. The local and international firms operating in Hong Kong can help. They have the expertise and they have the know-hows. Two strong elements of the Hong Kong economy has been mentioned in the morning session. I just want to quickly re-emphasize it again. One is CEPA. CEPA, for those who doesn't know about CEPA, is the deal between Hong Kong and the Chinese government. A deal that will make Hong Kong-based firms, either your international or local firm, will allow them greater access to the Chinese economy. And that's a very particular strength for Hong Kong that other cities simply do not have. Singapore does not have it. The other element is PRD, the Pearl River Delta metropolis. You're talking about Guangdong, Shenzhen, Zhuhai, and you're talking about 55 million people in 11 major cities. That's a big city cluster. And the city cluster is competing with other city clusters. In the Shanghai area, you have Shanghai, Hangzhou, Ningbo, and you have Beijing, Tianjin. That's a big backyard for Hong Kong. And again, a lot of competing cities simply do not have it. Hong Kong's role has changed over time. It traditionally had been a role for the international firms to come into China. They come in through Hong Kong. Nowadays, increasingly, Hong Kong has become a place where a gateway where Chinese firms move out of China, go global. Again, the Chinese policy have identified Hong Kong as a pathway. We have to pay attention to that, and there are good reasons for that. Why Hong Kong? Why can't the Chinese firms go directly? I consider, if you think of Hong Kong and Hong Kong's service infrastructure, think about a one-stop shopping center. A one-stop shopping center. You have all the professional service providers, legal, finance, human capital, talent management, branding, and consulting. For the Chinese firm, it's very easy for them to come to Hong Kong and get everything they need, all the advice they can have in terms of going global. And they speak your language, Cantonese and increasingly Mandarin, which is critical, I think. Hong Kong has traditionally been the China's window to the rest of the world, and that role has never changed and will not change. The multinational regional headquarters are mostly based in Hong Kong. Decisions are being made and resources are being allocated. So for the American firms, big and small, Hong Kong is probably the place you want to be if you want to expand your business or explore business opportunities in Asia, especially in China. Hong Kong plays a very big role, a very important role as China's international financial center. Now, is Shanghai China's international financial center? Not yet. It will be, but not yet. Mr. He Guangbei from Bank of China mentioned this morning that his firm, his bank, is using Hong Kong as a test ground. And his bank is not alone. ICBC, my office in Hong Kong is located in the ICBC tower. So when I get into the elevator, I hear more and more Mandarin-speaking conversations. And ICBC is one of the largest banks in the world, perhaps the largest. Correct. The largest. Not a lot of people realize that. It's the largest bank in the world. Bank of China, CITIC, everyone is there. The Chinese firm are using Hong Kong Stock Exchange for IPOs and accessing international capital, so competing with New York Stock Exchange. For the financial service industry, the industry that I'm in, I think Hong Kong should be the standard setter and innovator for China, because China needs all those expertise. Just very quickly, some recent trend. China will be a net global investor by 2017. Okay, that's a major change. It was a capital importer, and now it's a capital exporter. The second wave, as some other speakers has mentioned, of China's global efforts will mainly come from the privately owned business. They need capital, they need market access, and the focus have shifted from getting natural resources to acquiring market access, technology, and brands. Lastly, AmCham, as the largest business chamber, the largest international business chamber in Hong Kong, we do an annual survey to our member firms. We have 1,800 members. Recently, the annual survey that we have conducted revealed the fact that 45.4% of our members plan to expand in Hong Kong in the next 3 years. Nobody is leaving. And this is the experience I have, both for individuals and for the firms. You arrive in Hong Kong, you look around, this is pretty good. You settle down and you dig in and you expand your business. Nobody leaves, and that's exactly why Central is getting a little crowded these days. Thank you very much.
Thank you, everyone, for the opportunity to speak. I know there are a lot of service providers in the audience, and you probably know more than I do. One thing I would echo with James is that not until you get to Hong Kong or China, you don't really know China. For the past, I was first made in China, in Guangzhou. I speak Cantonese, Mandarin. I traveled in the past 15 years, sometimes as much as 3 times a month to China. I thought I knew China, but I didn't. Until Deloitte sends me to Hong Kong, I stayed there for 3 years. Now I'm just starting to get to know China a little better. But today, I'm going to share a few things. I always believe pictures is worth 1,000 words. So let's take a look at China as a source of global capital. As Jim said earlier, China's outbound direct investment flow is going to increase. But how did it happen? In 1980, China actually started open door policy. But that open door policy was open door for foreign direct investment into China, not for Chinese outbound. Not until the late 90s, they have a real going out policy encourage outbound investment. But not until China's accession to WTO, not until 2003, when Chinese government allows credit internationally and domestically, did the OFDI start to increase. Now you can see it's going up. So that's the trend. But let's take a look at the big outbound investment market from China. How much of that came to the United States? Not very much. If you look at it, although Australia gets a big chunk of it for its resources, and then the United States. But this is a very small number in relative terms. A lot of the money actually went to Asia Pacific area. So now let's take a look at, just narrow it down from Chinese outbound flow and how much into the US, and what does it mean in terms of dollars and cents. The view, I'm presenting a view from the US government. I would tell you that this view is understated, but regardless, it provides you some relative good information. So according to the data here, you see 2011, there is 3.8 billion of investment from China into the US. Well, that number, according to the Rodian Group, is about 6 billion. And others have higher or lower, but the number is around there. But it only represents 1.67%, or about 2%, depends on which number you use, of the overall foreign direct investment into the United States. So when you have the world's largest or second largest economy making investments in the US, is only representing less than 2% of the US FDI. That's pretty small. But that's looking at FY11. But if you look at cumulatively, in terms of the cumulative stock in the US, it's only 0.3% from China. Of course, decades European story, right? European foreign direct investment into the US. And now we're looking, the Asia piece is actually very small. And Asia only has 16%. And of the 16%, a big portion of that is from Japan. I don't know the Japanese investment in the US would decrease, but Chinese investment in the US will certainly increase. And so currently, while it's trending up, but it's way underinvested in the United States, being the first and the largest economy in the world, China will definitely expect to have a lot more to come in. But you already know that. So let's take a look at the greenfield investment versus M&A investment. There are a lot of that going on. This is a by-quarter analysis. But if you look at this, each quarter it may vary differently. This is on the number of investments, by the way, not in dollar volume. But you can see the M&A activity and the greenfield activities are probably around 50-50. Right. I like to say we follow the money. I always like to follow the money. That's why I ended up in Hong Kong. Now, if you look at where the Chinese investments coming in the United States, they're everywhere, but predominantly around the East Coast, West Coast, and also Mid-America. And you see Texas has a lot of it. California has 44 projects. Again, these are published data. There are a lot of investments that are not tracked. But this gives you a flavor where they're going. California, New York, Texas, Georgia, Michigan, the Carolinas. And while in Hong Kong, I must have met all the governors from the United States going to China to attract investment. And you also see the Chinese governments coming out to Hong Kong to also look for projects in the US. So you can see where the activities are ending. Now let's take a look at what industries are they investing? There are some of them, I know it's too small to see, but I'll show you perhaps a better chart. But they're aligned with industry. West Coast, you see a lot of software, IT, real estate trading. New York, you see a lot of real estate, as well as trading, construction, banking, financial services, private equity, and so forth. So follow the money, and you say, where are the money coming from? Right? Which province are they coming from? Certainly Beijing, because there's a lot of major SOEs out of Beijing. But then Guangdong province, right? Like Mr. Chi said. Guangdong province has a major outbound investment effort. And then you see Shanghai, Jiangsu, Shandong, and so forth. So you see the rooster's belly is very full and green. It's got lots of money. So here's a lineup of the industry where the investments are going by M&A deals and also greenfield projects. Again, I think they're about 50-50, but I think the industry here, perhaps a little bit misleading here, you don't see real estate here. I actually think real estate is not the last. It's actually probably pretty high up, but because they're not announced and it's not being tracked. A lot of real estate investment happening in the United States from China. So quickly, let's talk about Hong Kong. Role of Hong Kong. I think everybody said all morning about how great Hong Kong is, but one thing I want to mention is that in the past 20 years, Chinese companies had raised about $360 billion. That's about 50% of the Hong Kong IPO market, right? So hence, they have the money. And the money raised in Hong Kong is in Hong Kong dollars. It's not subject to foreign exchange control. So it allows them to increase their war chest in addition to, of course, the credit facilities they have. So in that regard, I just want to mention that. But all these other points are very important as well. So China uses Hong Kong for many, many reasons. Now, then I want to talk about tax. Everybody this morning talked about Hong Kong has low tax. But let's compare it to the neighboring countries in Asia Pacific. Hong Kong is the lowest compared to Singapore, Taiwan, Thailand, and China, and so forth. And one thing not to forget is, for example, China only has a rate of 25% income tax, but it also has a VAT of 17%. That is on every flow, right? The tax is pretty high. So a lot of countries also have GST, VAT, and so forth. Just looking at Hong Kong doesn't have that. So it's much lower than the picture presents. Now, Hong Kong has another thing, has an offshore income regime. So if the incomes are offshore, it actually taxed at zero rate. But of course, you need to meet some of the requirements. So that doesn't tell the full picture, but at least some indication. Then I want to talk a little bit about Hong Kong's treaty network. Hong Kong didn't start to have many treaties because it didn't really need to. It's free port and low tax. But not until 2003, you see, they start the activities. In 2010, a surge of 13 treaties because Hong Kong realized it's very important to have the bilateral income tax treaties. And they move very quickly, and to prove it's a very efficient system. No country moves this quickly. Some of the most important ones for this crowd is the North America Treaty with Canada, which happened in 2012. One thing you would note that Hong Kong does not have a treaty with the United States. When James and I were in Washington, D.C. last week, we talked about it with Treasury, but it is unlikely that there is going to be a treaty anytime soon between Hong Kong and the United States. And the reason is that there is no double tax because Hong Kong doesn't tax on worldwide income like the United States. They only tax on source. So therefore, it's difficult to have a double tax treaty with the United States, which presents a challenge, which I would quickly cover. The challenge is that many Chinese companies, for very good business reasons, uses Hong Kong as a holding company, as a platform to invest in the United States. However, when there is no treaty, we have a small problem. Because if you pay a tax, 35% federal, and then some New York State, New York City tax, make it a 41%, right? And then if you're doing very well in the US, you pay a dividend, no treaty, that dividend is subject to a 30% withholding tax before it gets to Hong Kong. So that's about 65% tax. Friends, that's not very good. But that's not to say don't use Hong Kong. Hong Kong is fabulous. It's used for all the reasons you have to use Hong Kong. So what do you do with this dilemma? So I want to share something from Jackie Chan. What does Jackie Chan know about investment structures? We were on this one-on-one event with him last night. He said something I thought was very profound. He said the difference between the US and China, he summed it up in this way. He says in the movie business, everybody in Hollywood has a script. Every actor knows what to do. Everybody has a storyline. Well in advance, they're prepared. But Jackie Chan shows, he says, I want a car, I want to jump off the bridge, I want to go skydiving, I shoot all that. And then I'm going to sit there, I'm going to think about how am I going to put this together? Well, kind of like investment. U.S.'s laws and regulations are abundant. They're everywhere. That's why we have so many lawyers and accountants. We all know the rules. We play by the rules, right? But the Chinese has a different culture. They said, I want to make an investment. They probably just went and did it. They didn't think too much about it. And then they said, we'll piece that together later. Kind of like Jackie Chan. But this is not movie business. And it's not a kung fu thing, right? So we have to do this right. I think Hong Kong is an excellent location. If you do it correctly, you'll be a lot more effective. Everything works. We can plan things around. So that requires the efficient planning for a business model and the structuring, as well as the investment structure. So whether or not you use debt and equity and so forth, all of that is very important. I always said, before I go anywhere, I want to know how I get out. If I find an efficient way to get out before I make the investment, I'll be a lot more successful than if I just copy somebody's model without planning. So I know our time is short, so I'm going to leave you with that. I think you need to consider all of this. Use Hong Kong is perfect for a platform, but do plan it very carefully. Otherwise, the cost could be quite heavy.
Good afternoon. Lily just said that pictures are worth 1,000 words. You will not find any pictures in my presentation. I'm a lawyer. I charge by how many words I write. So I'll rather show you 1,000 words than to show you one picture. Well, I've been asked to come here today to talk about the challenges and opportunities for outbound investments in the US from a legal perspective. Now, I thought I was going to be talking to the Guangdong investment mission about investments into the US. And when I realized that I'm actually talking to a wider audience and talking about the interaction with Chinese enterprises investing into the US, I had to quickly scrap my slides and replace with these. So I'm prepared to talk about this for about 8 days, but unfortunately, I've only got 8 minutes. So the slides are going to be brief. I'll give you an overview of some of the government entities and what approvals are needed from the China point of view. We'll talk about government policies and also talk about how to evaluate interests from Chinese parties. Now, hang on, let me just try and get this. Yeah. Now, more than 30 years ago, China started the open door policy. Foreign investments, particularly those in the US, used Hong Kong as a bridge to go into China. The people in Hong Kong have accumulated a bank of knowledge and experience about how to interact with foreign investments into China. And we've also got the experience now to help a lot of the Chinese enterprises going outside and investing all around the world, including the US. So the message today, and from my other fellow speakers, is that Hong Kong is a unique place, and you guys should be using Hong Kong as the avenue to attract investments into the US. What are the challenges that you get? Well, one of the biggest challenges that I face all the time will be people asking me, what are all these initials about when we talk about government entities in China? Well, let's take a quick look at this. MOFCOM. MOFCOM is the Ministry of Commerce. Now, whenever a Chinese enterprise wants to invest overseas, they need to report to MOFCOM, and when their interest for an M&A becomes certain, they need to report to MOFCOM and obtain an approval. NDRC, the National Development and Reform Commission, they need to, Chinese enterprises will need to write a report prior to submitting their formal bid, or signing binding agreements or applying for reviews by any government authorities of the host country. They must also get approval before signing definitive agreements. We talked about foreign control, the State Administration of Foreign Control, SAFE. We need to approach SAFE after MOFCOM and NDRC approvals, particularly when we are going to use onshore Chinese funds to pay for offshore obligations. Finally, SASAC, the State-Owned Asset Supervision and Administration Commission. This is very relevant when you're dealing with state-owned enterprises, particularly those that are under the direct supervision of SASAC. MOFCOM and NDFC application will need to be copied to SASAC for their approval, particularly if the SOE is entering or going into an industry that is not its main industry. So all these you will need to be aware of when you're dealing with an investment from China. Well, there are a lot of opportunities, and the previous speakers have already alluded to these opportunities. The 12 five-year plan have been encouraging industries to go out of China for investments and acquisitions overseas. There are a number of industries that are particularly interesting, and these would be new or clean energy. We're talking about the nuclear, wind and solar power, energy conservation, environment protection, biotech, like medicines and medical devices, raw materials, rare earth, information technology, advanced equipment manufacturing, and aerospace and telecoms. These are all opportunities that mainland Chinese enterprises are looking for and encouraged by the 12 five-year plan. Now, who are your potential investors or people who want to partner and do business with you? State-owned enterprises or private enterprises, obviously, or a consortium involving a PLC enterprise as one of the parties. Now, dealing with these entities will be quite unique. Some of you will be dealing with them for the first time. Some of you will have more experience with them. But a lot of people talk about interacting with state-owned enterprises. State-owned enterprises obviously would have a better history and better credit worthiness. But when you're dealing with any counterparty, be it state-owned enterprise or private enterprise, you would actually evaluate that potential partner's interests and worthiness, let alone anybody from overseas. I mean, even if you're dealing with somebody locally, you would do that. So you would normally have to do your usual due diligence, your feasibility studies, your checks, to make sure that whoever you're dealing with have the ability to complete the transactions and not waste time. Now, SOEs would obviously have a better credit worthiness, but it's a double-edged sword because SOEs have a lot of internal approval process. My experience with dealing with SOEs is that you deal with the department or the team that you're talking to, and they will need to report to their boss. And their boss will need to go and report to their boss. And then ultimately, it would take a long time for the approval process, but it's a much more determined process. The private enterprises, if they are listed on a stock exchange somewhere, then it is obviously carrying itself, it will carry a better credit worthiness. But private enterprises tend to be able to process the transaction quicker, they can negotiate the deals quicker, but you need to go and make sure that they have business synergies and that they have the commitment. Consortiums of PLC companies is also a possibility. You need to go and make sure that there are indeed the right cultural mix, whether you agree with the way that the business is going to be run post-acquisition. A lot of times we see that the difficulty would be how future operations are going to be funded. The Chinese enterprises tend to want to pay by cash or use cash, whereas the partners, the foreign partners, tend to want to leverage the transactions by borrowing. Now, other things to evaluate when you are dealing with a PLC enterprise or potential interested party, it's what kind of what experience do they have? Are they bringing professional advisors to the table? Have they been dealing with foreign enterprises and investments overseas historically? In the industries that they're working, do they know the industries? Do they need SASAC approval because they're doing something other than their existing main industry? And international operations, do they have already foreign investments? How well do they know the US would be important? Yeah. Okay. You would need to know how they're paying. SOEs tend to use domestic funding, and so and also they tend to want to pay cash. So you will need to get approvals, and you want to make sure that they have the money to come to you. Private enterprises are generally more flexible with funding alternatives. It's also important to note that if the money is already offshore, then it is far easier to complete the transaction. But if SAFE approval is needed, then it's going to take longer. So time is running out. I have finished with my 1,000 words. Thank you.
Thank you. Now we're going to turn to the audience directly and ask if there are questions. I would ask if you would direct your question either to one panelist or all the panelists, and if everyone cannot hear, we will, of course, repeat the question. It would be good if you would identify yourself when you ask the question as well. Thank you. Do we have any questions?
So my question is, are there now, anybody on the panelist, are there now some greater amounts of discretion being given to the asset management companies, government asset management companies in China to invest or cause their constituent companies to invest abroad?
Who would like to take that? Is there any more pressure being given to asset management companies to invest abroad?
Can you hear me?
I think it's on, yeah.
Okay. I think, again, talking about Hong Kong being relevant, the Chinese asset management firms has been encouraged to, over the past few years, or the past 5 to 10 years, I should say, explore investment opportunities, asset classes that are outside of China in Hong Kong. Again, Hong Kong is a place where you have a lot of international money. Beijing feels pretty safe to send the Chinese asset managers to Hong Kong with a certain amount of control. So that has been going on for quite some time. Of course, it's not exactly a very rewarding experience because 2008 happened and lots of asset management firms from China exploring investment opportunities overseas got hit. It's resuming. I think in the morning sessions they talk about the QFI and QD and QDRR is really a way for asset managers or institutional investors to come out of China, and that is encouraged. The more recent trend is even on the individual level, the wealthy Chinese individuals are who has a very strong desire to allocate some of their assets overseas and see investment opportunities. I think the traditional constraints are gradually being released and relaxed on that front. It will take some time, but I think the trend is good.
Thank you.
Hi, my name is Phil Richardson. I have a small company that has been developing some computer programs. They're looking for investment, and my question goes to intellectual property rights in China if they had a Chinese company that decided to invest in them. Could you, for whomever up there cares to answer that?
Sorry, can you repeat the second part of your question?
Sure. I have a small company that's developing some computer programs.
Yeah.
And if they had a Chinese company that decided to invest in them, what are the intellectual property rights situation in China that they would have to be concerned about?
Okay. Now, we might be going into a specialist area about intellectual property protection, but China has a developed set of intellectual property laws. The question is whether or not you should be registering your computer or your trademarks or your information in China. In that case, your rights will be protected. A lot of people are now talking about, it's not the question of whether or not they have the laws to go and protect you, but whether or not you can enforce them and how effective are you with enforcement. Now that's a topic that we can talk about for another 6-7 days. But generally, the position has improved a lot from a few years ago.
Someone, yes, in the front row. The microphone is coming.
My name is Philip Zhang, and I'm a partner of a major Chinese law firm, Zhenli, and I just helped them to open a New York office 2 months ago. And I remember that, Lily, you have a slide shows that the Chinese outbound investment, some are from Beijing, some from Shanghai, some from Guangdong. And, when people think Asia, they will think Hong Kong. And when they think of China, inevitably, people will think Beijing and Shanghai. So my question is that, can you do a comparison, Shanghai, Beijing, Hong Kong, compare with them, what's Hong Kong's strengths and weakness?
Certainly. I think that chart shows the greenfield, a lot of greenfield investments and M&A investments from China. But as some of the speakers mentioned earlier, about CCPIT actually did a survey. About 60% of the foreign direct investment from China actually went through Hong Kong. So those numbers, number one, it's understated. Number two, I think it gives a directional indication. It's not capturing a big bulk of it, like 60%. If you chase it back, you may find it to those roots. Hong Kong is really a platform. Even the earlier question on asset managers, almost every Chinese SOE has an office in Hong Kong, and they're using Hong Kong to accumulate some foreign exchange. So when the time comes, there's a deal, they can act very quickly. Also, Hong Kong has all the talents, right? They need the lawyers and accountants and financial advisors they can have easy access to. And another point is they're using Hong Kong as an international holding company, so not just for the US, but for European. You look at the chart I had on treaties, so there's really good treaties with the UK and other European countries like Netherlands, Luxembourg, and so forth. So Hong Kong is being used as an international platform and not just for the US. So the advantage of Hong Kong is huge over many specific cities in China. So maybe we can also chat offline in some of the other areas.
Thank you. Way back.
Hi, my name is Alex. This is actually for Lily. It's a two-part question. So being so involved in the Silicon Valley, and then since New York is really kind of Silicon Alley, and there's a lot of tech aspects to it, what do you see as kind of the main investment in terms of like tech industries? Is it fintech, clean tech, biotech? And, you know, the second part is, how does, you know, these kind of newer technology companies coming out of Silicon Valley and Silicon Alley go directly to find these interested parties in China or Hong Kong that are as willing to kind of, you know, do funding and, you know, be kind of in the development process?
Sure. So the first part is what industry are these Chinese investments coming into U.S. in terms of Silicon Valley and New York, and then also going the other way. I see a few major trends. Certainly financial services is huge. I see a lot of state-owned enterprises, you know, CIC, CICC, all of that are here. All the banks are here. And then you see real estate developments, like Ronnie talked about, although he said he just exited New York, but there are a lot of investments into New York, shopping centers, hotels, and everything. We also see wind technology, although that's more regulated. I think I had a number of Chinese clients who are interested in solar and wind in the New York facility, but they're waiting for the rate, the rate for the electricity from the government. So that's slowing things down a little bit. We see a lot of biotech, software investment, and actually, surprisingly, New York actually has a lot of technology companies that are of interest to Chinese investors. And Silicon Valley, tons of medical device, life sciences, we see all of that. On the other side, probably a little less known. Most people think of Hong Kong as a financial center, but Hong Kong has a great trade development board and also cyberport. They have innovation centers, design centers for fashion, but they also have design centers for tech and also have a technology innovation center. So cyberport has done a really good job for startup companies even to go in. A lot of companies want to test out in Hong Kong before they go into China. The concern was the IP, the intellectual property. So Hong Kong was a lot better grounds to do that. And also TDC does a really good job in terms of matching. And then on the other side, we see, I mentioned earlier, I saw every single governor from the United States coming through for promoting investment. But I also see mayors, governors from Chinese provincial governments coming to Hong Kong and promote and bring projects. So for example, just a couple of weeks ago before I left for the US, the Shandong governor brought with him 17 mayors. One of the mayors from Qingdao, he says, not to remember me just for the Qingdao beer, but they're gonna have a blue Silicon Valley in Qingdao where they have a funding provide for startups, and they want to see the convergence of technology from U.S. companies or other countries and the US and Chinese companies working together. Hope I answered your question.
Thank you. Any more questions? Yes.
Hi, my name is Dan Reichman. I'm a mergers and acquisitions sell-side advisor in New York, and when trying to introduce some sellers to mainland Chinese buyers, all of our transactions have contingent consideration post-closing. How, besides the seller doing due diligence on a buyer, have you seen the best way to get a seller the assurance that post-closing payments would be made, both in a mainland Chinese buyer and if having Hong Kong act as an intermediary would help? This is mainly directed at Dieter, however the entire panel can answer.
Well, let me try this. You might want to add something later.
It's all yours.
Well, you're asking me a credit question, actually. It's not a legal question. Yeah, well, the danger, and I have heard people ask me this question before, one of the challenges is that once they have had the agreement signed and there was a first payment at closing, then the counterparty will say, I don't have the approval to send you the money anymore. And there is a legal dispute for that. Now, the question is you need to make sure that at the beginning of the transaction, when the transaction is signed, that the approval or the requisite approval has been given. You might want a Chinese law firm like our friend here to give your opinion that all the approvals has been given and received for the money to be transferred. Now, if that money doesn't get paid to you, then it's a question of contractual obligation, litigation, or arbitration, and that is way beyond our discussion today. I hope I've answered your question. But again, this is not a topic that we can talk for days.
We have time for one more question. Yes? Well, two, we'll take them. Go ahead.
Can you hear me? Yes. I have a question about the political risks that Chinese companies may be facing here investing in the U.S. I guess I addressed my question to James and Lily since you've just gotten back from D.C. And what are some of the issues that Chinese companies might be looking at when they do their due diligence for the U.S. and to get an idea of the political risk landscape here? Thank you.
Why don't you start?
Okay. Well, I would say that is a really sensitive question, and I think for Chinese, there are two things. They're not familiar with how to really do business in the U.S., and oftentimes PR is really important. As I mentioned earlier, last year they're predicting $6 billion FDI from China. Well, you probably all heard about the pig deal. The pork deal, rather. A Chinese company is about to spend $7 billion to buy another U.S. company in pork products. Well, that one deal itself exceeds the whole year's foreign direct investment from the last few years, right? So big deals. But some may think, CFIUS approval in something like this, some may think it's as a matter of national security and others don't. There's different views on this. But I think for the Chinese to come in, they really need to do the homework, and they need to make sure PR as well as other advisors are used. Otherwise, there's a lot of issues in terms of not just the technical, the legal, and so forth. There's a lot of perception issues, PRs and whatnot. So there's a lot of challenges, and they're not used to use professional services as much as the U.S. companies normally do. So that's also another area that you all can help as advisors in the process.
I just want to quickly add on what Lily has said. We actually, I recall, we had a similar panel in Hong Kong. It was last year, invited some very solid and reputable private enterprises in China to talk about overseas investment. And two very impressive CEOs, and the companies are strong, and it seems to me that they have a very sincere interest in investing in the U.S. And all the participants from the private sectors, when asked the question, what is your #1 destination of overseas investment? Guess which country comes up first? It's United States. It's United States. Is there an opportunity cost for them if their deal doesn't go through? There is. And there's a lot of publicity on that as well. And Lily is right. There is a PR issue because you don't want those Chinese enterprises, especially private ones, who needs capital and who does have a business interest in the U.S. and probably will create employment in the U.S. You don't want to discourage them too much because if the deal doesn't go through, it's going to be on the newspaper and they're going to look elsewhere. They're going to start to look at Europe or elsewhere. I'm not sure that's good for this country.
Well, thank you. I'm sorry, but we do have to close now, and I hope you will all join me in a round of applause thanking the speakers very much.